Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES simply balanced within a range with responsive buyers active near yesterday's low. At this point, heading into the open, we have pre-market resistance 51.75 to 53.75 and pre-market support 41.75 to 43.75. Bigger picture, we know that the markets are quite exhausted to the downside. Now that doesn't mean that ES can't head lower to test 36.5, 38.5, potentially even a little bit lower than that, but it does mean that the downside is fairly limited here. And at the same time, the market has been in a short-term downtrend, and any pops up into resistance, 59.5 to 61.5 or 65.5 to 67.5, can still attract responsive sellers in this market. So overall, we are in a context where the larger time frame buyers and the larger time frame sellers can both be active within a relatively wide range. And usually this kind of context leads to more of a neutral type day, right? Where if the market heads lower, it finds the larger time frame buyers at key support, and in the event that the market heads higher, it can still attract sellers because of the short-term downtrend. So what this usually leads to is a lack of follow-through in directional movement. So that means on the downside, if we break pre-market support, we can still find buyers at 36.5 to 38.5 or at the support zones below, with 26.5 to 29 being a fairly strong support zone and 18 to 21 being a major inflection point. Now, I'm not expecting it to go down to 18 to 21, but in the event that we did break 36.5, the 26.5 to 29 area can still be a spot where the market reverses and puts in a pretty significant upside move. Now on the upside, if we actually continue holding above the prior VPOC at 48.75 and we continue balancing near the high, it can lead to a breakout move up to 59.5 to 61.5, potentially 65.5 to 67.5, but then we can still get a aggressive sell response in the market, even if the internals are looking strong and overall the price action is fairly strong on the day time frame. We can still get sellers active at 59.5 to 61.5 and 65.5 to 67.5, and basically every resistance zone along the way can still result in a pretty decent tradable reaction. And for that reason, we just have to be careful that if we are entering long on a breakout type setup, that we do it at still fairly decent trade location, right? So on the upside, for example, if the market is breaking out above 51.75 to 53.75 and we're able to secure a long position, it should still be at a price that's pretty close to that zone or even within that zone, right? And we also have to watch out for failures on either side, breakout or breakdown. On the downside, we especially have to be careful on the shorts to not sell the market very close to support or near a inflection point. Again, because on the larger time frames, the markets are quite exhausted, and even though we can head lower from here, it's not, the expectation is not for a big downside push at this point. So even on the short side, we have to be fairly careful with our trade location. So, given this context, it's clear that we have to be pretty careful on either side. We have to be very selective on the trade setups we take. We have to be careful of location on shorts and longs. And overall, today can be a riskier day because the larger time frame buyers and sellers have potential to be active within a range. And when that usually happens, then you can get pretty decent momentum and pretty decent moves in either direction, but they generally don't have that follow through. They don't generally sustain, and that can trap buyers and sellers in a market like this, right? The market can seem really weak intraday, and then the larger time frame buyers step in and push it back up. The market can seem pretty strong intraday, and then the sellers step in at resistance and push it back down. So just be aware of the possibility of the larger time frame buyers and sellers both being active on a day like today. And we know that the market's exhausted. It can definitely bounce to 59.5, 61.5, even 65.5, 67.5, but then the sellers can step in. On the downside, 36.5, 38.5, pretty key support. Below that, these support zones at 32.5, 33.5, and significant one at 26.5 to 29 can be a major inflection point for a intraday reversal. So those are the thoughts heading into the open. There really aren't any major economic reports, which can also lead to more two-sided movement. So just keep that idea in mind. Looking at the other markets, the Russell has been showing the most short-term strength so far. So we'll keep an eye on the Russell to see whether it's able to maintain that strength or if it starts to weaken and go back down towards yesterday's low at 1203.5. And in the Russell we now support around 1200, 1201. And similar idea on the NQ, except NQ is kind of in alignment with the S&P and has been fairly weak overnight as well. So not too much to read into the NQ, but Russell I think can definitely provide a heads up on where these markets may be headed. So right now the markets are stuck in a fairly narrow range. So we just have to be careful which way we go here, and that might mean no trade until we actually see some fairly decent momentum in one direction or another. And then again, we still have to be aware of where we're entering, within the entire range that the market has been trading in, and trade location is going to be very important on a day like today. So those are our main thoughts. Let's see which way the market tips, and we'll take it from there.